Okay, beautiful people, good to have you here today. Beautiful people, great to have you here today. It's a new day. It's a Friday. It's 7:10 p.m. and we're starting our live webinar today. Welcome. As always, I'm Atomashi Dania, Forex Vestrado's Global Market Analyst. It's great to have you here again. Today's topic is one that, as always, plagues both beginner and veteran traders alike. Uh, Before I go on, I'd like to say that we are Vestrado. Okay, we are a financial brokerage firm domiciled in Malaysia. All right, we got offices in Dubai, China, representatives all across the world, in Africa, Nigeria, South Africa, Kenya, whichever part of the world you're joining us from. Welcome. Karibu, Ekabo, Mambo. It's a beautiful day today. Um, we're going to have a swell time. For those of us who are joining, remember we have a question time and a lecture time for you. Beautiful people, good to have you here today. Okay, as the lecture goes on, you can feel free to ask your question in the chat section. Whether you're a beginner trader, you're a veteran trader, anyone you are, we are here for you. I'm going to try to answer as much as I can. Okay, now, let's see. I'd like to see your questions coming in just before we start. So what's today's topic? Overcoming the fear of loss. I laugh because you can't be a trader and you're afraid of losing. Ladies and gentlemen, losing in the trading world is part of the game. If you're a veteran trader, you will laugh because it's usually a problem maybe faced by beginner and intermediate traders, but when you become a veteran trader, you're able to navigate your way around it. Okay? So losing is part of the game. The moment you start to accept that, trading becomes beautiful for you. So let's start with that. How do you overcome the fear of loss? We're not going to waste too much time on this. Okay? First, the first thing to do is to accept that losing is part of the game. One, accept that losing is part of the game. Okay, that should be your first step. Keep that at the back of your mind. Let that be a foundation for when you're starting to trade. It might be a problem accepting that you don't want to lose whatever it is in the market, blah 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 blah. But you see, the next point solves that problem. When you get a strategy, it's eventually not going to be about whether you lose. It's going to be about how consistent is your strategy. So you must accept first that losing is part of the game. Second, it's important also to have a strategy in the market. All right. When you do, it becomes what matters is consistency. Remember, always ask your questions, whichever way it is. Next, form yourself or get a strategy. Okay? Whether you're a scalper, a day trader, or a swing trader. Whether you're a scalper, a day trader, or a swing trader, or you're all these three, or all three combined. Okay, you need an effective strategy. You need an effective strategy. That is step three. All right, that is step three. First, you accept that losing is part of the game. Next, you accept that what you want to see while trading is consistency, more gains than wins. Let's put that there. Let's put that there. More wins than losses. So if you have a strategy that gives you out of 10 trades, you have 7 in wins, 3 in losses, that's beautiful. That's good. That's consistency. If you have 65% more than your losses, all well and good. Now, once you form the strategy, what the next thing you want to do is get a good risk management. Get a good risk management. Let's call it get good risk management. Just let's leave that there. So an effective strategy always must have good risk management. I'm going to give you examples of that as we go. Okay. So when you have all this, the next thing you want to do, all right. But before then, imagine if a trade is going against you, what do? Do you use your stop loss at a certain level, or do you hedge? Do you hedge at a certain level? Now, I recommend this. I recommend mastering the skill of hedging in any trading you're doing, any position, any kind of trader you are. I recommend mastering the skill of hedging. Now, the fifth step is this. When you've got good risk management, okay, you have a strategy, you see that you're quite consistent. Before you get consistent, what you want to do is backtest. You want to do a lot of backtesting. Backtesting gives you the confidence, okay, gives you the confidence to employ your strategy in the market. Backtest, backtest, backtest. Never get tired of backtesting. And then the final point, which I want to make here now, always do a performance check. Always do a performance check. A performance check. All right. You've got your strategy. You're quite consistent. Everything going good. Okay. You want to see how effective it's been. So if you're on the Telegram channel, I always send you something. At the end of every trading week on Friday, I often say one thing. I say, extract your histories, extract your statements. All right. See what you could have done better. In trading, you have to be like a little kid, ready to learn. Empty your bucket. See what you could have done better. Now, when you have all this mapped out, you do this every time, you are able to see what applies or what works in the market. You become more confident about trading in the market. Confidence kicks in as a given. It's not a long topic, okay? It's more practical. So I gave on Facebook Live 2 simple strategies for scalping, and I gave for using the 15 minutes charts, and also a strategy for day trading and swing trading. Let's try to map out that strategy and see how we could apply it into the market, back test, okay, and see how over time that could help us overcome the fear of loss. Now let's see. Now, first is this. Let's get that strategy out there. Ramadan is coming to an end, our Muslim brothers and sisters. I hope you're preparing your salami too. Now, Next, let's get a simple strategy. Example of a simple strategy. If you've been following us on Facebook Live, I've always been given a simple strategy based on reversals. Okay, because reversals are easier to trade for beginners and for many traders alike. All right, the same sense. Number one, simple strategy for reversals. Is there support or resistance where price is? Around current market price. Number two, is price overbought or oversold? Or is there RSI or MACD divergence? Okay. Next, do we have the presence of complex patterns? We want to look at a simple strategy and then try to back test it on the chart. All right. Presence of complex reversal patterns. A simple strategy for normal day trading or swing trading. Okay. Next, do we have an early moving average signal? Do we have an early moving average signal? And 5, do we have a breakout? Is there a breakout of trend line or previous support or resistance? Next, do we have the presence of volumes? Do we have the presence of volumes manifested by Marubozu candlestick or volume indicator analysis? So do we have all these 6 things? Imagine trying to apply such a simple strategy in the market. All right, let's go into the chart and see what we have and see how we can apply it and backtest and see if it's been effective over time in the past for any particular pair we're looking at. All right, now the final point, which I didn't mention, is can we apply this strategy across board? Is it tradable across different pairs? Is it tradable across different pairs? Okay, if in the FX market or the crypto market, I always say that whatever your strategy is, if your strategy is effective enough for one pair, it should be effective enough for 2 or more pairs, ladies and gentlemen. So consider this. Now let's go into the charts. Let's go into the charts. Let's look at the simple strategy right here. First, we're looking for support or resistance, right? Now, let's speak the Euro USD first off. Let's look at an area where for day trading there was massive support, okay, and then whether there was also massive resistance. Let's look at this guy right here. Is there support or resistance? Correct. At what price level? 1.0950. How do we know? If you've been in a beginner class, if you were in a beginner class, you know that price touching this level one time, repeating again a second time already makes it support. Now, in and of itself, this particular resistance, this resistance is double top. This is called a double top right here. So the next point on a strategy, is it overbought or is it oversold? Now let's check the RSI. You could use the MACD, you could use the Bollinger Bands, it's your choice. Okay, say I'm applying the MACD right now. Do we have divergence right there? Comparing those 2 areas, let's look. No divergence, but yes, both swing highs are overbought right here on RSI, overbought right here also on RSI, 3 places in fact. Okay, that has been met. right? 1 hour chart, day trading strategy, for example. So next, next point, is there presence of complex patterns? Yes, this is a double top in and of itself. Now, is there a trend line breakout? Look, imagine we're here in price, right? This is where we are. We draw a trend line and we convert the 200-day moving average to support. We convert the 200-day moving average, that's the red line right there, to support this guy. So what happened when price broke it? Was there volume? I'm going to be repeating this strategy over time because it's a simple strategy that tends to work. Keep it simple is what I normally tell my students, right? It's a simple strategy, it works. But knowing when to enter is being able to look at lower time frames or the lower time frames in agreement with your current time frame of analysis. So 1 hour chart is telling you, okay, price is preparing to drop. Are there continuation patterns or break of trend lines or break of significant swing lows on the 5-minute chart or 1-minute chart for entry? Okay, that's another strategy to note. We're going to add that in our list of strategies. So look at that. At the break right there, what do we have? Let's look at volume. Let's look at volume. Around where the break happened, I'm going to draw a vertical line right there. Et voila. Et voila. So, what happened to price? You see? Let's try to zoom in. There you go. The nice break happened right here. What happened? So, you can see that I'm going to move the vertical line away right now. From where price started to prepare to break it, the volumes kept increasing such that from where it started, where it touched the trend line right here, where it touched the trend line right here, you can see that volume analysis bar right there. Okay, so much so as new bars kept getting added, they kept going higher and higher and higher, indicating that the volumes are increasing. Indicating that what? The volumes are increasing. So we had an increase in volume right around the clear break around here. You could enter right here. So one thing I didn't mention on our list of strategies, I'm going to put a horizontal line right there now. Say we enter here, right? And that area also coincides with previous significant swing low right here. Okay, some could enter at this candle, some here. Okay, because some people would have called this a retest. All right, some would have called this a retest of the trend line. Okay, that didn't go perfectly as planned, and entering here would have been quite valid. Okay, if you're a trend line trader, especially. Now, the kind of candle we saw there is something similar to a Marubozu, but not quite it. However, with the distance or the length of the wick on that candle on both ends, with bearish candles following it back to back consecutively, that already tells you that the bearish momentum is picking up. 1, 2, 3, 4, 5. Price action. The bearish momentum picking up. 1, 2, 3, 4, 5. With high volume analysis right there, bars topping up. You could enter right here on a sell. So what you want to do is, at this point, let's try to draw a rectangle right there. Go to the 5-minute chart. Okay. At this point of the break, let's see what the 5-minute chart is telling us. There you go. What do we see on the 5-minute chart? This is simple. You can see that right there. Okay. Nice Marubozu candle on the 5-minute chart. Strong Marubozu. Still part of the strategy. You see perfect bear right there. So when price broke it, we had a Marubozu, went back up to retest the trend line, came back down, formed another perfect Marubozu, okay, at the level of the previous significant low, formed another Marubozu right here, and a clear break happening right here with strong higher volumes, high volumes. You can see that, okay. This in itself would have been a descending triangle. Descending triangles are formed It's a sort of continuation pattern. Look, if we draw a trend line here, and there you go, connect the lower end. Okay, there you go. We have three Maribozus back to back. 1, 2, 3. Strong bearish pressure. In telling us strong bearish pressure, we have a descending triangle. Break of the support of the descending triangle. What do we have? 1. If all you do is enter right here, leave it. It's 5 minutes chart. So if you had entered that, let's see the time on that level, 12:10 a.m. and left your chart running till 4:40. About 4 hours, you've captured some good money. How many pips? Roughly 50 pips. Early in the morning, night trading. Depending on what time zone you are anyway. If you're in West Central Africa like me, you're in Kenya and all that, that'll be early hours of the morning. The Asian session. But if you're in Asia, Indonesia, Singapore, Malaysia, that definitely would have been the morning time. You're just waking up. You're just waking up. So I'm going to have a different live on the Facebook or maybe on YouTube here talking about agreeing your analysis on the 1 hour chart with the 5 minutes chart while looking for entry. So if you've seen that the trend is most likely going to go bearish after a break of one level, you want to look for entry on 5 minutes chart, the presence of breakage of that level on lower time frame on 5 minutes or 1 minute, and the formation of continuation patterns. If you say that's what you want to see, et voila. So this was effective. Perfecto. Perfecto. Now, let's go back into our list and try to add one more thing that we forgot to add. Okay, say, yeah, on lower time frame, is there breakage of trend line? Okay, or previous significant swing high or swing low? Okay, or you could say, are there continuation patterns? Are there continuation patterns around the break area, the breakage area on the 5 minutes chart, on the 5 minutes or 1 minute chart? So we have our 8 pink cows agreeing the higher time frame with lower time frame. So you've seen it on 1 hour chart. The break is happening. You want to know what the 5 minutes is telling you? Go to the 5 minutes, because the 5 minutes often gives you a depiction of what could happen in the market in the next 2 to 3 hours. So you want to be there. You want to see that. All right. So we have our 8 pink cows. Again, now we've seen that strategy played across board on the charts. We've seen it on Euro USD. On the same Euro USD, let's go back and back test. Let's go back and back test, okay? Where we had such a strategy, where we had it, did it fail? Where did it fail? Where did it work? So we've seen it here. Number 1, it worked. It worked, right? Let's go back. We're back testing. Where do we have support? Where do we have resistance? We're back testing. There you go. Good. So we saw this 3-day trend, 1 hour chart, 24th to, say, the 3rd of February, 24th of January to 3rd of February. What do we have? Was there support? Number 1. So On a lower time frame, 5 minutes chart, we see price form something similar to a double bottom. There you go, right here. 1, 2, 3. Yes, there is support. And guess what? It's happening right around the psychological level of 1.0200. This is 1.0211, just 11 pips away from the psychological level. So it's been established. There's support. Now going back to the 1 hour chart, is there overbought? In this case, is it oversold, or is there divergence? Let's check that. There you go. Oversold. Nicely oversold. Okay. Now, are there complex patterns? Yes. This one right here is a triple top on lower time frame. On 15 minutes chart, looks like triple bottom rather. Triple bottom. Yes. Is there a break of previous significant swing high or swing low? Is there also a break of trend line? Let's remove this guy. Here we have a gap. Gap is another strategy that enforces the movement of the market, the movement of price in the market. Gap is one sure trade, one very guaranteed trade in the market. Applying it can give you good money if you understand it. So if gaps are part of your strategy, go ahead, divide. Are there gaps? Yes, there are gaps. It's not part of our strategy, but all well and good. It has reinforced our strategy. So it shows that at this point, there's a 70 to 80% probability that price will try to close up this weekend gap right here. So break off previous significant swing high right here. We see that, yes, it happened. It happened. Okay, now on 5 minutes chart, let's try to highlight that. Around where it happened, do we have an agreement on 5 minutes chart? Let's go back there. There you go. So yes, it broke the significant swing high, the line, the pink line you see right there. Let's try to zoom in. What do we have? Okay, it touched it, it didn't break it clearly, came back down right around the 200-day moving average, went back up again, broke it strongly. When it broke it, what happened? Look, we had the presence of nice volumes. It's clear, even from the candle. That must have been news. But you see that very nice volume right there. Price went up, came back to retest. As the volumes kept decreasing, you would have seen this. Now, is there a presence of continuation patterns on the 5 minutes chart? There is no continuation pattern yet. There's none. Around this point, around where the breakage happened, no continuation pattern. So if you were waiting for a continuation pattern to form, you would have been in the right. Because at this point, that would have informed you, okay, no, I'm not going in. When the volume started decreasing right around here, that should have started to inform you, okay, slow down, it's not yet time to go full force. So waiting for the presence of volumes has protected you. That's one. Waiting for continuation patterns on the 5 minutes chart has protected you from being caught up by entering right here. Now, at the next breakage, price came back down to retest the resistance level, the pink line. And then what did it do? Okay, it moved within a range. It moved within a range. Look, it formed the bear. All these candles formed within the range of the bear. And then we had price, okay, formed bulls trying to break past the range of the high of this particular bearish candle right here. Okay, price kept testing and testing and testing until we had um, rising tree. This was supposed to be a falling tree method, but it failed. A falling tree method became a rising tree method for a continuation pattern. But let's leave that aside. Here you can see the range. 1, 2, 3, 4 within the range of this bearish candle, and then a bullish candle breaking the range right here of the bear. Broke the range of the bear, broke the range of the swing high, broke the range of the swing high, continuation pattern right here. If you had waited for that, and when that happened, do we see um um presence of volumes? Yes. So look, the volume, this guy tripled in size compared to what it was previously. That already should tell you, okay, continuation patterns, breaking past the range, volume, I'm entering right here on the buy. As I said, good risk management and back testing. We have seen two different instances now where the strategy has been applied. We've seen two instances. And it's been effective. So if you had entered right here and sold and bought rather all the way to here, this was a psychological level, so definitely you would have gotten out even before here. Intraday, you would have made some good cash. That's about 50 pips. 50 pips for a good intraday strategy. What are you looking for? And look, where the break was happening, it formed something, an imperfect Maribozu right there. Imperfect Maribozu, signifying the strength of the bullish power. So let's take this away and go back again. Let's look for another instance. This is Euro USD. Let's look for it on GBP USD. Is it effective on GBP USD? Then I'm going to show you how to get a performance report. Okay. Then we'll call it an evening. Or we'll call it a day, regardless, depending on where you're joining us from. So let's go to GBP USD. As I said, an effective strategy must be, if effective on one pair, should be effective on other pairs. Now, there's something I failed to mention. I forgot to mention right here. Yes. So we entered here. Where will you set your stop loss? If by instance, for instance, you made a mistake after seeing this bullish break, you made a mistake to enter right here where this bullish candle is. You bought briefly and price started to go against you. High. Okay. Seeing that the swing high where it broke past was here. Okay. Right here. I will set my stop loss right around here. This is the range, the major bullish candle, this bullish candle right here, that formed the presence of volumes. So where that volume occurred, you could say where the major volume occurred, you're going to set your stop loss around the swing low or swing high of that region. That's one. Okay, because if price is able to travel back down to cover the length of this bull, it means that the bearish power has equated the bullish power. So you want to be very careful. You don't want to be in that trade. You want to be in a trade where it's telling you straight, one direction. This is no longer one direction. If it heads back down and covers the range of the major bull right here, the swing low there is this guy, and this guy. It looks like another block on lower time frame. So if price is able to come back down, it's lower time frame, so it's small pips. You don't have to worry too much. If price is able to come back down to equate the presence of the volume formed right here, then I know that the bullish outlook has weakened. I'm out of that trade. You can place your stop loss right there. You can place your stop loss right there. Or you could say, where the break happened, the previous significant swing high, you want to place your stop loss right around here. Right? Maybe a few pips below it. But what I would have done was look for the range where the volume happened focus on swing highs or swing lows around that range. If price is able to travel the distance back, be it an uptrend or downtrend, then I know that there's been an equation of the bullish and bearish power. I don't want to be in that trade. Now, there's another way. I said any good strategy, you should learn how to hedge. Look, right here, I see a continuation pattern. That's why I said, as a trader, you have to learn your continuation patterns. It tends to tell you when the pressure is weakening. Okay, so imagine this. This is the next presence of volume here. Mind you, we have a sandwich pattern here, but let's leave that. This guy formed the bull, and then we had bears. It was trying to form the rising tree method. If you're familiar with the rising tree method continuation pattern, you're good. Trying to telling us that if the next candle after this guy broke past the range of this bull, then the bullish power is strong enough to do what? To continue. But guess what? It didn't break past the range. It formed a spinning top. It formed the spinning top right here and formed a bear that came back down, breaking the open of this bull. Next, what happened? The final candle here broke past the range of the bull, this bull, automatically telling us the bullish power has weakened. So if you're the type, you know your hedging, you know your candlestick patterns. Once you've seen this, at this point where the break of the range happened, you are selling. You bought before, maybe 0.04 lot size. But at this point, you could sell, hedging the trade, maybe 0.03. So making it so that you're only losing 0.01 lots. You're reducing your losses. Because as you're coming down, you are capturing. And guess what? There's still hope that price will continue going up. And if that happens, you capture coming down and capture profit going up. In this case, you're turning your disappointment into a what? A blessing. Trading is beautiful. Know what you have to know. Get your knowledge. The knowledge of continuation patterns here already tells me the bullish power has weakened. If I'm not using the volume analysis indicator, the bullish power has weakened. Okay, the rising tree method that was supposed to form. By the way, if you know the rising tree method very well, you know that sometimes the candles that form within the range can be more than 3, could be 4, could be 5, could be 6, could be 10, so long as it's within the range. In this case of this bull, 1, 2, 3, 4, 5 bearish candles within the range of this bull, and then the next major bullish candle that formed went halfway. After this, there should have been a major bull that broke the range of this guy, and that would have made the continuation pattern complete. But it didn't happen. We had price form another strong bear that came back down to break the range of the major bull. At that point, you hedge. You hedge your trade. I can't sing it well enough. Or if you're not the type to take risks, you get out. Sorry about that. That's my dog. You get out. But you see, I like risks. I'm not afraid of losing. So what do? Because I know my patterns, I have a good sense of where price could most likely head to. I'll just place a counter position, a counter trade at this point. I bought at 0.1 lot size. I could sell at 0.09 lot size, or the same lot size quantity, arresting the loss you've made. If you were losing $20 before buying, okay, and it's going against you, once you sell same lot size, you've arrested your loss at $20. Okay, so much so that if you now close it in profit, when it starts to go back up, you are not adding in profit, losing the loss, and might still end up in double profit. You are turning a disappointment into a blessing. Trading is beautiful. There's always a way out. If your lot size is minimal, if your lot size is moderate, you always have a way out. Even if your lot size is high, if your capital is large enough to survive it, your margin is available, you still have a way out. Ladies and gentlemen, so This has been effective. Last but not the least, let's look at GBP USD. Let's look at GBP USD and find out what we're doing if our strategy is effective. Let's look for the same pattern, the same strategy going across board. We're back testing. Okay, we're back testing. Now we're going 1 hour chart, day trading strategy. Okay. Okay, I think we worked on GBP USD before. Let's see. One other pair. Let's look at AUD USD. Well, there's some nice patterns here. Okay, I'm tempted to do GBP USD, ladies and gentlemen. Let's do that. There you go. So, good. Another effective point. So we have seen price at resistance. Back test, back test. You got a back test. 1 hour chart. It's been going up. Okay. 11th of September, 10th to 1st of October. More than 2 weeks. More than 3 days. You could say that you want to see a length of trend, a trend that is at least 3 days long on 1 hour chart. That could be your strategy. That's part of mine. At least 3 days long. So we've seen that. We've seen that there's resistance here. What's the price level for resistance? 1.3428. Why that particular area? Let's make it our green line. Very thick line there. Very, very thick line. So we can identify what's happening in that place. 4 hour chart. It's not showing us anything. Daily chart. In the past, okay, it's a previous significant swing low and swing high in the past. 2020, 2021, we see that right here. Also 2021, 2022-ish. Okay. It's a significant level of the past. But more importantly, the fact that price touched it 1, 2, 3, and about 4 times already makes it resistance. Already makes it resistance. So there's resistance. Number 1. Is it overbought? Let's check the RSI. Yes, overbought here, markedly overbought here. Here and here. Is there divergence? Is there divergence? Let's see. No divergence. Okay. Now, is there a break of significant swing high and swing low or break of trend line? Let's draw a trend line. Assume we're here in price. This is where we are. We've seen price form a range. This is a double top, triple top, in fact. And the triple top, we've got a neck. Why did I use complex reversal patterns? Complex reversal patterns tend to have an equilibrium level. And at that equilibrium level, wherever price breaks it, okay, there tends to be the presence of volumes that signifies one directional movement in the market. So here, the equilibrium is happening right around here. Now, do we have the presence of volume analysis? Any volume there? You have to learn to wait. Right here. Where it broke it and break of the 200-day moving average. Yes. If I zoom in, we've lost that part of the chart. Good. If I zoom in, what do we have? There you go. Where the break happened right here, you see that volume, the volume here is almost times 2 where it touched the support level initially. Okay. So we have that very long volume right there. What candle do we have? Now let's go to the 5 minutes chart. Let's highlight this on the 5 minutes chart. We're looking for entry on the 5 minutes chart. Are there continuation patterns? Okay, this is the problem with MetaTrader. Finding the location of marked areas is a bit tough. We are getting there. Okay, 1 minute. This is 1 hour first. There you go. 5 minutes. Let's mark the date on that. 30th of September 2024. Okay, 30th of September 2024. Okay, we're going back. Our chart is taking time to load, but we're going to wait for it. We're going to wait for it. There you go. It's loading. Okay, looks like we can't access that area on the chart. It's taking too much time. 15 minutes. Okay, the speed of the chart is making it tough to backtest. Okay, we have the 30 minutes right here. There you go. On 30 minutes, what do we have? Nice breakage. On 15 minutes. All right, this is going to take forever. For the learning process, we got to wait. We're almost there. We're almost there. There you go. There you go. 15 minutes chart, what do we see? Nice continuation pattern. We're not going to go to the 5 minutes chart because the chart takes quite a while to load up, but let me show you what I see. I see this. I see this. Do we have continuation patterns? Yes, we do. I see this and I see this. Okay. Descending triangle. Descending triangle affirming the presence of a continuation to the downside after the breakage happened right here. Doesn't get better than this. Now, if you want to go further, you might say this in itself is a rectangle. Another continuation pattern. So you're having two continuation patterns back to back, right? Back to back. Et voila. Descending triangle, rectangle, and then look at price. So we've checked Euro USD, 2 occasions. We've checked GBP USD, 2. One event in the past. It's been effective. At the break right here, where would I set my stop loss? Right here. The area of equilibrium. If price is able to travel back up, fine. This is where the break happened. This is the range, the major candle that started the range. So I just put my stop loss here. Let's give that a different color. I put my stop loss right there. That's it. Now, in rounding up today's class, on our Vestrado platform, we have something called account history. Now, if you have your chart looking like this, all you have to do is double click. And when you do that, you have something like this. You go to the account history section. At the end of a trading week, you can choose and get out your statement. So let's try to do that. Right click, custom period. Okay, when the menu pops up, what do we want? We want last week. Or we say today is 28. We want from the 21st of March to the 28th or 29th of March to make up for today. And then you click OK. Your history will pop up right there. And you can see your history. You can extract it as an HTML file or print it as PDF, save it as PDF. After extracting as HTML, you can then print or rather save as PDF. Let's take a look at this guy. If we have an example right here. Okay, it's the same thing. We have the same accounts. No difference. No trades on this account. Sadly, I can't show that to you, but that's the process. It is what it is. Yeah, we have one. Beautiful. We got one. You see that? The history is there. Now, what do I want to do? Save as detailed reports. Okay. I want to save that. Say detailed statement March 21st to March 28th. Say, let's put it on our desktop. Or let's see, documents. Okay. Save that right there. And that's it. And when you save it, okay, you can choose to open it this way. Let's use Microsoft Edge Explorer to open it as an HTML file. This is what it look like. Let me show you what it look like. Let's try to see if I can show that to you. Let's try to see if I can show that to you here. There you go. Yes, we can. Yes, we can. Yes, we can. Et voila. This is what it looks like on Explorer browser or Chrome or wherever it is, whichever browser you're using. So you have a performance report that tells you, for example, okay, here I deposited. Let's try to zoom in so you can see that. It tells me all my trades, open positions, and the ones I closed. I deposited $1,000 here, profit of $12. Okay, gross profit $12. You see that profit factor. Okay, how well you're able to make profit. All right. Gross loss, your losses throughout that period. It tells you your consecutive wins, so you can assess your consistency. It also tells you your consecutive losses. It tells you your highest loss and your highest win. Here I see, you see, consecutive win 4, consecutive losses 0. And I can tell you for a fact that the strategy we just discussed is something that was applied here, right here, for this particular trade that brought in $12. It's the same simple strategy. So you can assess yourself. Performance report. You even have a chart right here that tells you how your balance and profits and additions kept going. Ladies and gentlemen, that's it. Once you've applied your strategy, you've back tested, and you've become good at applying it with good risk management, all right, in different scenarios, you want to see how it's been doing within a week, at the end of 2 weeks, 3 weeks, 1 month. You got consistency in 3 months, good. You have yourself a working strategy. And at the end of the day, when you have all this, losing becomes part of the game. Losing becomes part of the game. Now, in rounding up today's lecture, I want to leave you with these few points. Okay. I'm going to leave you with these few points. Overcoming the fear of loss is centered around overcoming the fear of loss. Fear of losing is centered around a good strategy, a good back-tested strategy, good risk management that involves placing your stop loss accurately, or hedging. I recommend learning how to hedge. Okay. And good win consistency rate. These three things. Overcoming the fear of loss is centered around a good back-tested strategy, good risk management that involves placing stop loss accurately or hedging accurately, and good win consistency rate. Ladies and gentlemen, that ends the class and the webinar for today. Thank you for coming aboard. All right. Sadly, today we didn't have any question. Looks like some of our traders are not in the house, the ones we expected. But it was good to have you. Thanks for joining. I'll see you again next week. Remember, trading is beautiful. Trading is life. The trend is your friend. And whatever you do, trade within the trend.